Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This Simply Stocks, and I'm live with another live session with you all. And as promised, around 1:30 p.m. And today I want to talk to you about one of the online stock that, in my opinion, look extremely good. It is a more than 40,000 crore market cap company. In fact, way more than that. So it will be interesting to note if you can pause the video and guess as to which stock I want to talk to you about. But it is looking interesting after the June quarter numbers, and the stock has not moved much even after the numbers came out. So we'll discuss about that. We'll discuss about the markets in detail and also answer your queries. So let's get things started. Let more people join in the next 2-3 minutes, and then I'll begin the session in earnest. Hope your trading and investment journey is going well and you're able to make money because the market has done appreciably well from the June lows, and hope you're well and good and your family members are doing the same. Srinivas, hello. Hope you're doing well, Mr. Reddy. Uh, so basically, let's just begin the session in a unofficial manner with talking about the markets per se. So if you look at the markets overall texture, it is looking pretty strong. And why I say that is because even after a lot of selling in US and with whatever is happening globally and the markets falling, Indian market has been resilient, be it the mid and small cap or the large cap indices, and things have gone smoothly, even though you have US markets going down by 1,000 points. I mean the Dow going down by 1,000 points, or the Nasdaq going down 3-4%. Most of the Indian centric stocks have done well, and what that meant was that the stocks that probably are domestic in nature has done exceedingly well, whereas stocks that are probably having some exposure to Europe, especially UK, are in deep trouble and are not able to perform at the same level as they used to perform uh, before. So what is happening in the market is that market is trying to segregate between those companies that are going to come up with very strong numbers because of the Indian economy, which is insulated from US or Europe, the companies that are insulated from US and Europe, and companies that have a lot of exposure, at least more than 25-30% exposure to Europe, especially UK. So that is what one needs to understand. Now, when will this change? We can have a long debate over it, but it looks like at least for the next 1 quarter or so, at least till Jan Feb, at least till the winters are over in Europe, this might not change that quickly. So in that regard, people have, or larger investors have, probably built their positions around Indian centric consumer companies that I have been talking about for the last 2 months. Over the last 6 7 live sessions, I have talked about it. So I believe that stocks which are relating to say retail, which are related to direct consumption, which are related to uh, in say infrastructure ancillary, housing ancillary, which are related to paints, etc., and many other factors, wires, cables, and you name it, they will continue to perform pretty well. And now what we are seeing is that specific companies, which are again India centric, even in a difficult sector, are also performing pretty well. So overall, the texture of the market is at the moment, and probably will remain for the next couple of quarters, uh, India centric, and companies which are doing well domestically. If we go beyond that, if you look at IT and pharma stocks, do look attractive. Stocks have fallen 30, 40, in some cases 70%. But the problem here is that when will the earnings come back, and when will the earnings sustainably come back? That is the issue. Plus, there are a number of mid-cap IT companies uh, that look like trading at very good valuations at 18, 19, 20 times, but we don't know how the numbers will pan out. It could be a situation where the numbers could be lower than the expectation of the market and lower than the last quarter, or you can say quarter in the last year, and then that will nosedive the stock even further. So that's why people or larger investors are staying away from sectors like IT and pharma, and looking at sectors which are more India centric in nature. So that's how the market is. So what has happened is that those type of stocks have gone up appreciably, and so the market overall has gone up, although companies which are more related to Europe and US have struggled over the last 6 months, at 6 to 8 months, and even after the fall in June, even after when the markets declined in June, these stocks have not recovered that much compared to stocks which are more, you can say, domestic oriented, which are more domestic oriented texture in nature. So that's the call on the market. I think market will remain robust. I would not be surprised if we in this rally, and there will be some little bit of correction here and there, but before a major 15% correction, I won't be surprised if we hit 21,000, 22,000 on the index. Now that could happen over the next year and a half, but I don't see major corrections coming before that. So that's my call. I think this time around Diwali, post Diwali till Feb March, things will be very good from companies which are more festive related. And we know all about it. There are different segments in which a lot of festive stocks that do well, and I have you can say talked about it in a number of live sessions about them. So I think those stocks will continue to do well, which are more India consumption related. Now, coming to my point as to which company that I wanted to talk to you about, which could do extremely well over the next 3 years. I believe next 3 years could be extremely good for this company. The stock is down, still down 40% from the top. But even more than that, I think it is down something in the region of 40 to 45% from the top. Uh, but has recovered 30-35% from the lows, and it is a larger mid cap company, not a very small cap company or something. It is a larger mid cap renowned company that has come out with strong, you can say, FY23 June numbers, and that is why I want to talk to you about it at the moment. So that the stock is Info Edge. I think Info Edge or Naukri, in my opinion, looks very good at these levels, 4200, 4300 levels. One can start accumulating here. Even till you can say 3800, you can go about accumulating the stock. Your stop loss will remain around 3400, and I think over the next 3 years it should hit 8,000. I think it should double over the next 3 years. It should easily double over the next 3 years. I think 8,000 is a possibility here. uh, One has to be patient because this is a company that has a market cap of around 55,000 crores. It is not a 5,000, 10,000, 3,000 crore market cap company that will move up very quickly. But a safe bet at these levels, its high was around 7,500, its low was around 3,300. It has come up 30% from the lows. At current levels look good. It went to 4,600, declined 10% over the last month or so, 15-20 days. I believe at 4,200 with a market cap of 54,000, it came out with a sales figure of around 550 crores. So it looks like that around 2,300 crores of sales would be fetched in this time around. So it's trading at 24 times FY23 earnings. Slightly stretched, but you need to understand that earlier, say in June 19, it had a loss. So it had a net loss of around 15 crore, an EPS net negative of 15 rupees, a net loss of around 200 crores. Whereas this time around it has come out with, even though if we take in the other income, a portion of 327 crores, it has come out with you can say a profit of before tax of around 340 crores. So if we take a normal other income factor in here, which could be around say 30-40 crores, say 30 crores, even then I would say that the profits are around say around 30-40, around 40 crores. So if we take out 300 crores from the other income portion, even then, profit before tax of 40 crores looks extremely good compared to loss before tax of 150 crores that came out in June of 19. So things are turning around here in Info Edge. I think now they are going to come up with profitability in all 4 quarters, and I believe Info Edge should continue to do well. An EPS of 50 to 60 rupees is not out of realms. Taking that into consideration, the stock is trading at around 70 times earnings, whereas it used to have negative EPS and yet it used to trade at 8,000, 7,000 rupees. So trading at 70 times is very reasonable. It could easily trade at 120, 130 times because you need to understand that these companies used to not make profits, and now the company is coming back into profitability. If another 2 quarters, two consecutive quarters come out with decent profitability, I think InfoEdge is going to do extremely well over the next 3 years. I have a feeling that 8,000 is a possibility in here. Yes, you can buy some here. Should not go in and buy big time at 4,200. The charts show that there is a chance that the stock may touch 4,000 over the next 1 month or so, and probably you can accumulate between 4,300 to 4,000 levels and then reap the benefits by the end of 2025, when the stock should be much higher from these levels if the numbers continue to be the way they have been. So that's about Info Edge. I believe it's a good buy at these levels. Your stop loss is slightly deep at 3,400, and that's why you need to accumulate on every decline. But over the next 3 years, the company should end up doing pretty well. Alright, guys, so I'm ready to answer your queries. Can you use the super chat and super sticker feature that will help me grow the channel? That will help you also ask me questions and ink out answers in greater detail. Abhijit, Borosil Renewable. I believe Borosil Renewable at these levels is a buy, but again, you should have a 2 year time frame. Can go down another 10% to around 500 levels, but these are decent levels to get into it for a 20% upside in a year, and 60 to 70% upside over the next 3 years. So that's my call on Borosel. Jubilant Foodworks is a good buy from a year's perspective. I will not be surprised if the stock ends up hitting 750, 740, 750 over the next 1 year. Looks interesting. The numbers have improved, and I think numbers are only going to improve going forward. Uh, so plot animator, Infobeans versus LTTS. Always LTTS, I think, by the larger company which has a more established brand in this space. I think in IT, but I think I would say avoid both at these levels in this condition. There are other, you can say, consumer oriented companies, even small cap arena, which should do well, say over the next 2 years or so. I don't have a short term time frame. Now, one thing I want to specify here is that whatever I talk about, disclaimers do apply. And second thing is that whatever I'm giving you opinion on is based on a 2 year time frame at least, because over the next 6 months there could be a chance that the market may remain up and down. Market may not perform that well. Market has gone up. I mean, the stocks have gone up from the June lows a lot, and I believe that it they will be the same stocks that will continue to probably fathom traction and keep on moving up. So you have to be careful. You have to be patient in making money into these stocks. Abhijit, Acrysil looks very interesting. I think Acrysil around 700 to 680 is an accumulate. 660 is your stop loss, and I will not be surprised again from a 1 year time frame. I see 1,000 to 1,100 on the stock, 40 to 50% upside. I will not be surprised if you see 40 to 50% upside over a year's time on a Crisel. Target in Voltas and Reliance after 1 year. I think Voltas, you need to wait and see how margin picture and how numbers could be in the summers. I will not say that you hold it that long. And in Reliance, I see a 20% upside. I think 18 to 20% can be gained. If you want to make more traction out of it, then wait for bad market days, bad days when Reliance falls to 3% and all that, and keep on accumulating, you can gain more. But I don't see more than 20% on Reliance over 1 year at the moment. Okay, so MTAR Tech, see the numbers are okay, but the stock has really disappointed me. If you have a 3 year time frame or more, yes, it is a buy at these levels. If you have less than that, there are other defense companies that you can probably look at rather than buying into MTAR. But they are expensive. So one thing I want to just specify here is that other defense companies are expensive at the moment. So MapMy India do look good from a 3 year perspective. Yes, it looks expensive at 30-35 times sales, but the numbers are very strong. So any declines on MapMy India between 5 to 12% is a buying opportunity from a 3 year time frame. It's a doubler, easily a doubler over a 3 year period, MapMy India. Okay, I have not looked at Gokul, so won't be able to comment on that particular stock. Okay. See, Nazara Tech, I will say avoid. Avoid such companies which are not making heavy profits and are trading at very astronomical valuations. I think IEX is a buy at these levels with a 25-30% upside and say a 5-6% stop loss. I think these are attractive levels to buy. If you have a 25% upside target, then keep a 6-7% stop loss from your buy price, and IEX can be bought here. So that's a call on both of your stocks. So TCI Express also is a very decent company. In fact, all these logistic companies have been doing exceedingly well. So TCI is not far behind and should end up doing well as well. But the only issue here is that the stock has run up. So stock is not cheap at these levels. Stock has run up. So be careful buying here. What you can do is accumulate on any major declines when the stock comes to closer to your moving averages rather than buying immediately. Again, most chip tech I have not looked at. I won't be able to comment on it. That's the cause. See, fine organics, any 7-8% decline from current levels you can buy, but I would prefer buying into pure consumer oriented companies rather than even something like stocks which are into chemicals at the moment. Avoid thyrocare. I think all these diagnostic companies, especially those that cater directly to the consumers, are going to face the heat because there is a lot of competition that is coming in with Tata, and people are getting more aware of getting a cheaper rate for the tests that they used to get from thyrocare or Dr. Lal. So it's an avoid at the moment. Okay. Again, 3 year, if you have 2 to 3 year, Buchi Babu, and thanks for all your support. Both Tata Chemicals and Tata Power look good. In fact, Tata Chemicals, even at these levels, even after the run up, feels like it's a doubler again. Another stock that could go to 2400, 2500 over a 3 year period. So, more bullish on Tata Chemicals comparatively. Sanofi, I've not looked at. I won't say you buy into that those companies. Those have ROEs and ROEs that are pretty good, but the stock returns remain between 10 to 15%, no more than that. At best, 12-13%. So Tata Consumer at these levels, yes, can be accumulated 1 year time frame, 20 to 25% upside, possible depending on how the results pan out. But yes, it does look good, Tata Consumer. Not looked at RHI Magnite, so won't be able to comment. See, I do make videos on small caps. I avoid Vijay most of say micro cap. I may come out with that. I'm researching a few of them, but they would remain to be around 1,000 to 2,000 crore market cap. I won't go below that because uh, gullible investors do fall a prey to it. So I won't be able to make on that. But most of the companies which will be smaller in nature will be between 1,000 to 2,000 crores. You will get those videos over the next 3-4 months time frame. Yes. So CDSL, if you have a long-term time horizon, then on any declines is a buy. Not at these levels. Let it come to closer to the 50-day moving average, or between 20 to 50-day moving average, and then get into companies like CDSL. So DVs is a long-term buy, a good 15-18% CAGR return, doubler in 4 years, very much possible. But there is a caveat here, is that most of the pharma companies have a lot of issues with US FDA and other things. So there are their numbers are extremely difficult to understand. In fact, it is the most difficult sector to understand numbers, in my opinion. If you are able to understand the business and numbers pretty well, yes, go ahead and definitely buy. Divis is the best of the businesses in the pharma space. All right, guys, thank you. Thanks a lot for being online. Please like and subscribe my channel, hit the bell icon so you get every video straight away when I post. Kindly support me on Patreon. Thanks a lot for watching.